I'm Neil Flint. I'm the Managing Director of VIP, Vet Insurance Protector. We're a specialist insurance broker. We specialise in finding the right insurance for people. Pet insurance is a means of you transferring the risk that you would have of any veterinary bills in exchange for an annual premium. What's not covered with pet insurance is routine treatments such as castrations, vaccinations and dental work. The main things that would be covered are any illnesses or injuries. Anything that's pre-existing wouldn't be covered. For example, if your dog was to have had a broken leg and anything connected to that leg is highly likely to be excluded in the future. A good example would be where a dog was to develop arthritis in that leg in the future, it would be excluded as a result of the original break. Pet insurance will also cover any third-party incident that your pet may have. An example of this would be if your dog was to get out into the road and cause a road traffic accident. Claims for this type of incident can be very high. You could find yourself faced with thousands of pounds worth of personal injury claims, not to mention the damage to the car. Typical premiums for pet insurance range between £15 per month for reasonably basic cover, upwards to £40 to £50 a month for comprehensive cover. All policies have an excess. This is the amount that the insurer expects you to pay towards any claim initially. Most excesses range between £60 and £100. It has now become more common for excesses to also have a percentage contribution. These tend to be between 15 and 20% of any claim. So the insurer would expect you to contribute the first £60 to £100 and 20% of any of the remainder of the claim. An excess is normally applied annually to a policy, so each year as you make a claim, you will generally pay that excess again in each policy year. Pet insurance is a great idea as a way of being able to meet veterinary bills, because veterinary bills have been rising far faster than inflation. This is due to huge advances in medical science. Particularly big veterinary practices have lots of machinery and the staff need training how to use this machinery, so the veterinary practices have high costs and this has rolled into the treatment becoming more expensive. Many people are able to make payments to veterinary bills that are small, for example maybe a few £100, but where people tend to stumble over is when the bill runs into thousands of pounds. Many years ago this wasn't the norm. I can assure people now it is unusual for us not to see claims that rise into thousands. A typical example could be a skin condition. We've certainly seen pets insured where these bills have gone beyond £10,000 and sometimes per year. Even something as simple as like arthritis to treat could tend to cost thousands of pounds per annum. The cost of the medication, the continued blood tests to ensure the medication isn't causing other damage to the dog, plus the routine checkups to make sure that it's working, not to mention all the initial tests that need doing to establish exactly what is wrong with a dog, which could involve an MRI scan, which is way past £1,000 now. Pet insurance for older dogs is far harder to obtain than it is for younger dogs. This is because naturally a dog tends to be a greater risk as it gets older, as the likelihood of claiming with an older dog is far greater. The market is certainly shrunk when your dog is older, and we strongly recommend that people insure their pet certainly before 8 years old at the latest, but we think it's best if you find the right policy when you first get the dog. Almost all insurance companies are quite happy to accept you insuring your dog before the age of 8, and once the dog passes 8 they will continue to allow you to be insured with them. Some people have suggested that putting money aside to pay for vet bills is a better idea than pet insurance. I'd strongly disagree with this, but I would rather see people do that than nothing at all. However, I see little point in putting money to one side in a bank account that is for the purpose of paying for the pet insurance, because you're never going to use that money for anything else, so really you're still carrying the same risk. A great example would be you were to save £30 a month for say a couple of years, you still wouldn't have enough money to be able to carry out basic checks on your dog, such as an MRI scan, If the dog has developed something long term, then it's highly unlikely that the money you are prepared to put aside each month would meet those bills.